Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds to 9 o'clock, with news commodity prices are in a bear market. Oil, gold, iron ore and copper are all lower, and that includes dairy prices. Today's GlobalDairyTrade auction saw prices fall another 7.9% in US dollar terms, down 4.8% in New Zealand dollar terms. The crucial whole milk powder price is down 11%. That's the third fall in a row on the lowest volume since June. We'll now see analysts cutting their farm gate payout forecast for this season, and the screws will turn harder on the dairy sector. Prices are back to where they were in September, although they are still about a third higher than the lowest point in August. In other news, American consumer prices rose in October after 2 straight months of declines as the cost of healthcare and other services rose, crucial evidence of firming inflation for the Fed. Other data out in the US showed that manufacturing output rose in October, although industrial production declined on a sharp fall from mining, that is oil output. The rise in factory output of consumer goods and construction were healthy, and as was the growth in capacity utilization according to the Fed data. There is nothing in today's data release to dissuade the Fed. In fact, there are growing voices being raised that the Fed may have waited too long to start raising rates. In China, data out today shows that electricity consumption dropped 0.2% in October. And despite that, the Chinese president is claiming that the country will post strong 7% growth in the current year. In Australia, their Reserve Bank released the minutes of their last meeting, the press release of which was mildly upbeat. But the slowdown in China and the rest of Asia remains their biggest concern, while at home weak wages and continued falls in mining-related investment will prove the heaviest drags on growth, they say. Despite a moderately upbeat assessment of global conditions, the RBA said the outlook for the Asian region, particularly China, remained one of the key uncertainties in forecasting global growth. In New York, the US Treasury 10-year yield benchmark has risen purposefully today, now at 2.30%. Equity markets are higher too on stronger earnings reports. But the US benchmark oil price is lower today, now just under $41 a barrel, while the Brent benchmark is under $44 a barrel. The weight of output rising faster than demand is keeping a sinking lid on energy prices. And maybe the Paris attacks will accelerate the drive to wean ourselves off oil faster. And even gold can't win a trick. It is down sharply, now at $1,068 an ounce. New Zealand dollar starts today lower at 64.6 US cents. Against the Aussie, it is 90.8 Aussie cents and 60.8 Euro cents. The TWI is at 70.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.